Very good morning to all of you. It's a privilege to speak here to this very knowledgeable and august audience. And let me begin by first thanking OECD and the Green CFFFC for giving me this opportunity. Andre, in opening speech, did mention that once you reach New Zealand, you get confused whether it's today, is yesterday, or is tomorrow. Let me add a little bit to that confusion, because the topic which I am expected to speak is on the implication of FinTech on today and tomorrow. So let me begin by saying that today is the tomorrow of yesterday. And why I am saying so? I am saying so because I see that an impression is prevailing that FinTech is a new kid on the block. I would simply say that finance has always been there for thousands of years, and technology has been gathering moment from time to time. You would recollect that when the wheel was invented, it was considered to be a major technological breakthrough. Then came the steam engine. But to my sense, in the present context, I think the advent of the computer and its integration with finance, I think that is something which we are discussing today. As Gordon Moore's prediction of doubling of overall processing power of the computers every 2 years kept coming true, more and more applications in the banking space are getting pushed to the computerized environment. Dr. Michio Kaku, the famous American physicist, he mentioned that today, and I think there was a reference to it in the previous talk also, that the cell phone which you carry in your pocket today, it has more computing power than what NASA was having in 1979. The total computing power available to NASA was less than what your cell phone is carrying today when it took the spacecraft to the moon in the year 1969. Now, this is one side of it. On the other side, Paul Volcker in 2009, in his report, has very famously mentioned that the only thing useful, and I repeat, the only thing useful which the banks have invented in last 20 years is the simple ATM, nothing else. This is what is mentioned by the Paul Volcker. Now, it is with this background that I want to start my talk today. When we talk of FinTech innovation today, we generally, I mean invention which have enabled big data analytics, algorithm, and applications of blockchain technology and their various, their variants. Now, it's a very vast topic, and to compress it in 20 minutes, which I have been assigned, is going to be a difficult task. So what I intend to do is to touch upon some of the important points, and at times it may so look that I am talking in cryptic sentences, but I may be excused because I need to maintain the discipline of the time. I would like to start with that what is the this overall buzz around the FinTech. I would say that the recent wave of innovation in financial services is being driven by some key factors. And some of those key factors are from the supply side. The other key factors are from the demand side. Now, if we look at the supply side factors of FinTech, then one is obviously the technological advancement in the areas of cloud computing, big data, artificial intelligence, and robots. So those are technological advances. And second is the focus on cost cutting by financial institutions and the innovation spiral which bring about multiple products from a single technology. And mind it, the topic given to me is not the importance of FinTech, which is normally what today you will hear all over the world about the importance of FinTechs. I think very carefully chosen topic is the implications of FinTech. So obviously, there are two sides of the coin. Coming to the demand side, obviously, three very clear factors. One is the demographic factor, and I think we started the day with I want it now. Same is true for the banking, same is true for the services. Then the universal low-cost access to the internet, which has made it possible, and expectations of the Zen next customer from the banking system. Now, FinTech is capable of cutting the interface customers have with traditional financial institutions by offering products that are customized, convenient to use, and simple to understand. Disruptions are already visible, particularly in the areas of remittances, credit scoring, and underwriting, investment advisory, etc. Now, customers are comfortable today with what can be termed as someone famously said, that banking would be required always. Banking would always be required, but banks may not be required, however. So we are talking about the banking without banks. That's the one thing. We are also talking about that is the journey from advisors to the algorithm. So advisors may not be needed. Now, financial institutions, this is a writing on the wall for financial institutions, that the financial institutions currently offering off-the-shelf products would have to use predictive analysis and track the customer's behavior to offer them customized products and solutions. Using big data analytics is important not merely from a prudent business sense, but essentially as a means to survival. With even more innovations and investment in technology, going forward, the face of finance is going to change forever. That would be reasonable to assume. And let me briefly touch upon some of the probable changes which are in the offing, which are writing on the wall. And of course, first is the very widely discussed area of distributed ledger technology, DLT. Now, DLT holds a lot of promise for all transactions networking, which is requiring non-repudiation and finality through maintenance of real-time updated transaction ledgers. Now, it is believed that blockchain technology has the potential to speed up clearing and settlement in financial market and eliminate the settlement risk that arises because of the different time zones in different markets. That's the plus side of it. But on the flip side, the opinion is divided over use of blockchain on issues like verifying the identity of customers, preventing money laundering, cancellation of erroneous and fraudulent transactions, and the complexity in clearing in terms of transfer of the corresponding cash payment for the title of the assets which was transferred through using the blockchain. The second highly discussed area in the area of FinTech is around digital currencies. Now, with the increased internet penetration and improvement in encryption technology, adoption of digital currencies with potential for reduction in operating cost and increased efficiency has become a real possibility. Of course, there are some fundamental issues. Their value not remaining stable, credibility being poor, not being widely accepted, etc., etc. Now, there is one view that central bank should take the lead both in supervising private digital currencies and in developing digital legal tender of their own. However, challenges would remain around their potential impact on the financial stability. My sense is that a digital legal currency will also require significant research and development to build market credibility and ensure security and efficiency across applications. Then other areas are around the crowdfunding and peer-to-peer lending, which all are familiar with. All these things are very promising, but they are not without their own risk and challenges. And just let me mention a couple of them. FinTech is certainly taking the banking and the financial sector by storm. It is believed that the innovation and disruption that software and technology bring to banking, that is the economies of scale, the perfect customer experience, customized offering, data-driven processes, make their adoption inevitable. It is something which is bound to happen. It is already happening. But having said that, there is also a flip side to the use of technology, and the financial sector has already seen some major downside of the misuse of technology. Cyber hacking of Bangladesh bank in recent time is a case in point. But what I'm trying to mention, and I think this is something a very important point, it is as much as a social issue, and maybe we were hearing to the economic anthropology, a new subject which I am introduced today, something to think about. What I would like to say that FinTech risk is not all about just technology risk and the cyber security. Though they retain their position at the center of the spectrum, but there are much wider and granular aspects, such as the issues arising from transactions in financial products and services by unregulated financial and non-financial entities, acquisition of software solutions by the financial institutions without access to or the awareness of the source code, and cross-linkage which are not properly understood. But also, let me draw attention to another adverse impact of FinTech innovation. Now, several banks across the globe, and it will include India, they are replacing the customer-facing human beings with the robotics. And it is something which has already started happening. But there is a recent research in the Oxford University which says that in coming few years, around 47% of the jobs as we see them today would be replaced by the robots. There is very recent study by World Bank released last year only, which says that the jobs which can be so lost in India could be as high as 66%. So this is what we are looking when we talk about the artificial intelligence and robotics. There is an equally strong opinion that the similar kind of fears were expressed when the computers were invented. But as a matter of fact, computers, while they took away a number of jobs, but they created even more jobs. That is the other opinion. I have only two questions. One, when in the area of FinTech, in the area of technology, if robotics keep on taking over the jobs as they are taking today, whether the loss of job and the creation of new job, whether it will be simultaneous? Is it possible that one job lost and one job is created? If not so, if there is a time gap, how the world is going to cope with that time gap? That is a question we need to ponder over. And the second question is that the skill gap, which is being made available because of the robots taking over, and the skill gap which is required for the new jobs which are expected to be created, whether the people who are losing the job would have the same skill gap that they can fill in the requirement which is required for the new group which has to come. So I think these are some larger social issues. They have their own implications. And when we talk about the FinTech, when we talk about the artificial intelligence as a global community, as a group who is concerned about the financial inclusion, financial education, should need to be conscious of these larger issues as well. Technology must be used. It should be used for the efficiency, but with a great sense of responsibility and the social implications. In this forum, we talk about the financial inclusion. For whom financial inclusion is meant? The financial inclusion is meant for the people who are excluded, who are in the weaker section of the society. But if 47% or 66% people are getting added to that stock, then for whom we will be talking about the inclusion and the education. So I think this is one single larger issue which I wanted to flag in this conference. Very quickly, in remaining around 5 minutes, I'll just quickly would like to give you some sense about the applications of FinTech in India. In India, the entire government bond market, sovereign bond market, moved to anonymous screen trading in the year 2002. The entire stock market transactions were moved to the screen-based trading, as well as in the year 1994, with a very modest turnover to begin with. And today, we have a daily turnover of around $3.5 billion in the stock market, and the daily turnover which is recorded in the derivative market, in the stock market, is currently around $172 billion. So this is the kind of magnitude of transactions we are talking about. At the end of March 2016, the National Electronic Fund Transfer System which we are having, NEFT, it handled around 1.2 billion transactions, which were valued at around $1.3 trillion, and it was increased from the previous year. And in a single month of March 2016, NEFT processed the record highly monthly volume of 129 million transactions. I am just mentioning to give you a sense that in a country of the size of India, the number of transactions or volume of everything would be quite high. We have also introduced the prepaid instrument, the mobile wallets, but a very important and significant introduction of FinTech, which has happened just few months back, and it is known as UPI, Unified Payment Interface. Now, this is a payment interface which is created by our prime payment system company, National Payment Corporation of India. this is a payment interface which is neutral to any channel. So it can handle mobile, internet, the usual banking, all through a common interface and without even requiring the customer to reveal her or his account number. It can happen through the mobile number or through the unique code which is given separately without compromising the security of giving the account number. And to just give you a sense, around 2-3 years back, we started the process of capturing biometric identity of every citizen. And as of today, 1 billion of the roughly 1.2 billion total population of India, 1 billion people have already been captured in the biometric authentication. And this makes it possible to introduce all kind of payment applications and other FinTech related activities. Apart from these general payment applications, we have also put FinTech to use for something like we have recently introduced a trade receivable discounting system for MSME, which can again be exchange traded and which makes it possible for MSME to realize their receivable fast, for the education loan, for the loan to micro enterprises. For all of these portals have been introduced. I think I would just like to conclude here, but I was really a little bit amused or intrigued to see, as we say that we will have more and more applications of FinTech, and Ida mentioned about an app for inducing or motivating the people to save, and sometimes without their knowing that something is being saved. And I was just thinking lightheartedly, at least in India, there used to be an app like this in every family and all the time. And this app was known as the lady of the house. Today is very interesting that we are replacing it with a FinTech application. In sum, I think there is tremendous potential for a traditional financial institution to welcome the new technological wave in the shape of financial innovation. And if done with responsibility, in the end, is a win-win situation for both the sides. And that is why many regulators around the globe, they have started adopting what is called as the regulatory sandbox approach. So we allow the innovation to take place in controlled condition so that if there are any adverse implications, they can be contained in a sanitized environment. I think that's the right way of doing this. With this, I think I conclude in my assigned time. And once again, thanks the organizers for giving me opportunity, and thank you all for a very patient hearing.